As we speak, Advanced Micro Devices is trading at $245.23 USD, showing a significant intraday jump of 5.74%. This price action is particularly striking because it signals a clear departure from the choppy, uncertain trading we saw during the final weeks of 2025. While most of the market is still trying to find its footing in the early weeks of January 2026, Advanced Micro Devices is aggressively reclaiming ground. The immediate insight here, and the one most people are overlooking, is that the stock is no longer just moving in lockstep with the broader semiconductor index. We are seeing a distinct decoupling where the market is starting to price in the massive scale of the upcoming MI450 deployments. While everyone was focused on the short-term dip last December, institutional buyers were quietly accumulating positions, and today's volume confirms that the big players are back in the driver's seat. The common expectation among retail investors, many of whom are watching these swings on the Robinhood app or checking their individual brokerage accounts, is that Advanced Micro Devices is simply a second source option for companies that cannot get enough supply from NVIDIA. The reality, however, is far more complex and much more bullish for Lisa Su and her team. The narrative that they are just picking up the crumbs left behind by the market leader is being shattered by the sheer performance of their latest silicon. We are seeing a transition from being a backup provider to becoming a primary architectural partner for the largest tech companies on the planet. If you look at the recent partnership announcements with giants like Oracle and OpenAI, it becomes clear that these aren't just trial runs. These are long-term commitments to build massive AI clusters specifically around the Instinct platform. This is the difference between expectation and reality that creates the kind of sustained momentum we are seeing in the price today. When you look at the recent trading activity, the strength isn't just coming from the tech sector's general buoyancy. There is specific, heavy demand for Advanced Micro Devices as a standalone play. Traders on the Interactive Brokers platform and those using professional-grade tools are noting a sharp increase in call option activity, particularly for strikes in the 260 to 270 range. This suggests that the market expects this rally to have significant legs. Meanwhile, for those of you managing your own long-term portfolios through a Fidelity trading platform, or perhaps using Schwab Intelligent Portfolios to keep your asset allocation in check, this move represents a major validation of the buy-the-dip strategy that was so heavily debated just a month ago. The sell-off we saw at the end of 2025 was largely driven by tax loss harvesting and general fears about a cooling AI spend, but the reality is that the capital expenditure from hyperscalers like Microsoft and Google is not slowing down. It is actually accelerating as they shift from the training phase of AI models to the massive inference phase. This brings us to the core of why this stock is behaving so differently today. In the world of online investing, it is easy to get caught up in the noise of daily headlines. But if you take a step back and look at the institutional activity, you will see that firms are looking far beyond the next quarter. They're looking at the 2026 and 2027 roadmap, where Advanced Micro Devices is expected to reach a 35% revenue compound annual growth rate. This isn't just speculation. It is backed by the record $9.2 billion in revenue reported in the last major quarterly update, where we saw the data center segment growing at a staggering pace. For anyone looking for investment help or trying to understand the nuances of self-investing, the lesson here is that the market eventually rewards companies that can consistently deliver high-margin growth, even if the road there is volatile. Advanced Micro Devices operates in four primary segments: data center, client, gaming, and embedded. For years, the gaming segment was the steady workhorse, but today it is the data center business that is the crown jewel. With EPYC processors now holding a massive share of the server market and the Instinct GPUs starting to make real dents in the AI accelerator space, the company has transformed its financial profile. The acquisition of Xilinx and the more recent move to acquire ZT Systems show a clear strategy to provide full rack solutions rather rather than just individual chips. This is a massive shift in their business model that allows them to capture a larger share of the total cost of ownership in data centers. When you use the Fidelity mobile app to check your holdings, or if you're tracking your Fidelity ETFs, you're essentially betting on this integrated systems approach. It is no longer just about who has the fastest chip, it's about who can provide the most efficient, scalable power at the rack level. Let's talk about the recent performance at CES 2026, which acted as a major catalyst for the current price jump. The introduction of the Ryzen AI embedded processor portfolio and the next-generation Gorgon and Medusa processors for the AI PC market has set a new bar for edge computing. While everyone was talking about Tesla stock or the latest movements in Apple stock, Advanced Micro Devices was quietly positioning itself to dominate the refresh cycle of hundreds of millions of corporate laptops. This is an area where they have a distinct advantage in power efficiency and integrated graphics. The reality of the AI PC trend is that it isn't just a gimmick, it's a fundamental change in how software will be executed on the local level, and Advanced Micro Devices is right at the heart of that transition. If you are using investing sites to research your next move, you might notice that analyst sentiment is starting to tilt heavily back into the strong buy camp. Even those who were skeptical just a few months ago are being forced to revise their price targets higher. The consensus is moving towards a 280 to 300 USD target, which would represent a significant further upside from current levels. For those who are active in the Robinhood stock trading community, or perhaps using SoFi Invest to build your positions, the question is whether to chase this move or wait for a pullback. This is where having a clear plan for online investment becomes crucial. Whether you are holding Fidelity mutual funds that have heavy exposure to the semi-space or managing an individual brokerage account at a firm like Interactive Brokers, the key is to understand the underlying drivers of the business. Speaking of the business, it's worth noting the technical deterioration that some bears were pointing to late last year. They argued that because the stock was trading below its 50-day moving average, the party was over. But as we see today, technicals can change in a heartbeat when the fundamental reality shifts. The reality is that Advanced Micro Devices is now generating more cash than ever before, which gives them the flexibility to invest in the software ecosystem, specifically ROCm, to compete more effectively with NVIDIA's CUDA. This software gap has been the main bear argument for years, but with a 10x increase in ROCm downloads and a rapidly growing developer base, that moat is no longer as wide as it used to be. The expectation was that NVIDIA would hold a permanent monopoly on the software side. The reality is that the industry is desperate for an open-source alternative, and Advanced Micro Devices is providing it. Now, I want to hear from you. Comment below how many shares of Advanced Micro Devices you are currently holding, or if you are looking at other chip stocks, like NVIDIA stock, to round out your portfolio. Do you think the upcoming earnings report in February will provide the next big leg up, or is some of that already priced in with today's 5% jump? Engaging with the community is one of the best ways to get a pulse on retail sentiment, which often precedes big institutional moves. Whether you are using the Robinhood app for its simplicity or Fidelity Wealth Management for a more comprehensive approach, your perspective as an investor matters. Looking ahead, the most significant catalyst on the horizon is the launch of the MI450 series in the second half of 2026. This isn't just another chip release, it's a full-scale assault on the highest end of the AI market. Initial benchmarks suggest that the Helios systems will offer industry-leading memory capacity and bandwidth, which are the two biggest bottlenecks in AI training and inference today. If they can execute on this roadmap without significant delays, we could see a total re-rating of the stock's valuation. Currently, the stock trades at a premium compared to the broader market, but when you account for the projected growth rates, it actually looks relatively attractive compared to some of its peers in the Magnificent Seven category. As you manage your Fidelity IRAs or look for the best Fidelity brokerage options to house your long-term wealth, remember that the semiconductor industry is inherently cyclical. However, this cycle is different because it is driven by a fundamental shift in global computing infrastructure. This isn't like the gaming boom or the crypto mining craze. This is a foundational build-out of a new kind of economy. Companies that are providing the picks and shovels for this build-out, like advanced micro devices, are in a unique position. Even if the consumer economy softens, the corporate spend on AI infrastructure is likely to remain resilient because companies view it as a matter of survival. For those using SoFi Investing or SoFi stocks to build a diversified portfolio, it is important to balance this high-growth exposure with more defensive plays. But within the tech space, Advanced Micro Devices offers a compelling mix of established market share in CPUs and explosive potential in GPUs. The embedded segment, while currently seeing some headwinds, is also poised for a recovery as industrial and automotive sectors start to integrate more